What's up, guys? Welcome back to my channel. So today I'm actually going to be sharing a very powerful strategy you can use to scalp Boom1000 and Crash1000. Right, I've gotten a lot of feedbacks from you guys on the envelope strategy that is really doing a magic for you guys. So this is another powerful magic strategy you can use to build your small account. Right, you can use it to build your small account, and you can actually use it to grow your equity. Right, the strategy is a very simple one, and it's a very simple one which you can use to trade from 1000 and Crash 1000. Right, meanwhile, if you are here to subscribe to, if you are new to my YouTube channel and you are here to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification, as that will really motivate me. And you can give a thumbs up and like button. It's really go a long way to help us grow. Right, so for those of you that have actually gone through my envelope strategy, and for those of you that have gone through it, you can actually see that it's actually a banger. Right, so I'm back again with another banger today that you can use to make your broker. You can use it to make your broker. So I don't want to waste your time. Right, the strategy works perfectly on Crash1000 and Boom1000. This is a scalping strategy that you can use to take 5 candles to 10 candles and 15 to 20 candles depending on your account size. Understand me very well, depending on your account size and depending on the kind of trader that you have. Right, so obviously I'm going to be doing justice to the both condition that you can take 5 candles and the condition you can take 20 candles, as the case may be. Right, so we're actually going to be using 3 indicators for the strategy. We'll be using 3 indicators for the strategy. Let me walk you through how the strategy works. Alright, we all know that for Crash1000, right, for Crash1000, when we talk about the scalping, that means we're actually going to be buying Crash1000 and we'll be selling Boom1000. Right, the reason why the strategy works perfectly for these two pairs is that these two pairs are less volatile in terms of scalping. Understand my point? They are less volatile in terms of scalping, in the sense that our 5 candles on Crash 500 on Crash 1000 or Boom1000 will not give you the same thing when you take 5 candles on Boom 500. So it makes them more volatile compared to the other Boom and Crash pair. Right, and you actually don't need much. They tend to give you a long trend in the opposite direction, as in the sense that they tend to give you a long trend on scalping, right, than buying. Right, so since most of you are actually new to trading and you just need something that will give you a daily target of $10, $20, $100, depending on the kind of trader that you have and depending on the kind of equity that you have. Right, so the strategy works perfectly for Crash1000 and Boom1000. So without wasting your time, let me share you the strategy with you. Right, we're actually using 3 indicators, a moving average on our main chart and 2 other indicators on our indicator window. So let me quickly explain the process for the strategy, the condition that we use to take our buy. Right, the condition we will use to take our buy. So the first and foremost is that the strategy works out perfectly on 1 minute time frame, since the scalping strategy, and at the same time you can extend it to 5 minute time frame, but all boils down to you. Obviously, if you want to use 5 minute time frame, then definitely you are not taking 5 candles. Don't get that confused, because a 5 candles on 1 minute time frame will give you a single candle on 5 minute time frame. So if you want to use 5 minute time frame, then that is boiled down to you. You need to restructure your plan, your trading plan, suits that 5 minute time frame. If time permit, I will actually do justice on how you can use the 5 minute time frame and 15 minute time frame. But since majority are scalpers, so we'll be using 1 minute time frame, right? We'll be using 1 minute time frame, and basically what we'll actually be going to be looking out for is that would actually be looking for a spike. Then after the spike, and we'll go to our 5 minute time frame, you can actually see. So on 5 minute time frame, obviously you will not be taking 5 candles or 5 candles like I said, because 5 candles on 5 minute time frame, that's 25 minutes. So that will be 25 candles on 1 minute time frame. So basically what we'll be doing is that, you see this green moving average, right? This green moving average, right? It has to cross this red up. We have to there, right? Let me use another color. Let me use blue. Okay. Okay. So obviously you need to wait for this green moving average here and this red moving average. So the green moving average has to cross the what? The red upward like this, signifying that we are in a what? We are in a buy. Remember that on crash 1000 we'll actually be buying, not selling. So once the green moving average cross, so once the green moving average cross, um, once the green moving average cross, wow, so once the green moving average cross, so once the green moving average cross, okay, so we'll actually be waiting for the green moving average to cross the red upward for crash 1000. So once it cross the what? The moving average, the red moving average upward like this. So guys, sorry for the interruption. Sorry for the interruption. So once the green moving average cross the red upward like this, this is the first confirmation on our indicator window. The second confirmation is going to be coming on our main chart here. So all we'll be doing is that we'll need to to price has to be above this green moving average that we have here, like this. Price have to be above it, right? Price have to be above. So once price is above it, like we have it here, you can take your you can take your buy here. And while you are doing that, make sure the green moving average has actually touched the 20 level or the 10 level, as the case may be, for crash 1000, right? So once the two confirmation is met, then you can actually take your buy. Now, to be at the safer side, a good strategy must have an entry and an exit, together with your risk management. Now the risk management here is that once you enter, right, that you have the confirmation all met, the green moving average at the indicator would have actually touched the 20 level or the 10 level, right, and it has crossed over the red moving average at the indicator window here, right? And at the same time, that is the first confirmation. The second confirmation now is that on the main chart now, price is above the green moving average. Then obviously you can enter for a buy. So to be at the safer side, you put your stop loss below the what? Below the moving average, right? Below the moving average, and the last what? The last swing. Now this is where the logic comes in place. Your market structure, you can't overweigh it, right? If I'm to analyze this thing now based on market structure, right? Based on market structure, obviously this is what I'm going to be having, right? I Obviously this is what I'm going to be having, right? This is my last swing high, this is my higher high, right? And this is my higher low, right? And I actually the condition met up here, and I want to buy. Obviously I'm buying at this candle here, right? My stop loss is going to be below this swing low, right, which is my higher low, right? And then I'm going to be targeting them, taking out this previous higher high that we have here, right? So my take profit will be the previous swing high that we have in the market, right? So that is what my take profit will be, right? And my stop loss is going to be the what? Below the low, the swing low that we have. So once you take your time and backtest very well, you actually find out that the strategy works perfectly. This is another example here, right? This is another example, right? Your stop loss is going, look at now, you have the crossover here, all right? You have the crossover here. This was the last swing high, so your TP can be actually, you can actually take more than that, right? But to be at the safer side, just target the previous swing high, and your stop loss will be below the what? Below the swing low. So if you observe very well, and if you do your back test very well, you always observe that your stop loss will be below the swing low, and price, and also is going to be below the what? The moving average that we have at this main chart, telling you that no matter how your stop loss won't get hit, and your take profit would be hit, right? So some of you have actually been trading for more than 25 years, and you can actually see you've taken a trade whereby you set your stop loss, you set your take profit, and the trade actually hits your take profit. None of you has never gotten that, right? So do your back test very well. I do your back test very well. This is another example. This is another example here, right? This is another example. So do your back test very well. Make sure you follow the rules. Follow the rules. See, this is another example here. Right, this is another example. Right, your stop loss will be below this low, and your take profit will be here. Right, you can actually see, no matter how you get, your take profit will get heated. Right. Meanwhile, if you are here to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. So this is another example here. Right, this is your previous swing high, right? So you target your what? You target this high. Your take profit to your stop loss will be below the swing low, and your take profit will be here. All right. Though you can actually trade your take profit, and you can trade your stop loss depending on your account size, and depending on the kind of trader that you have. So this is for 5 minutes. So on 1 minute time frame, the same thing is applicable on 1 minute time frame. Right, on 1 minute time frame, you will tend to get more entries than you will have it on 5 minute time frame. The only thing is just that on 5 minute time frame, the entries you will be having on 5 minute time frame are more reliable than the one you have on 1 minute time frame. So that is what distinguish between whether you are using M1 or you are using M5, right? So that is for Crash 1000. Then for Boom 1000 now, right? For Boom 1000, right? So obviously the reverse is the case. So on Boom 1000 now, you're actually going to be waiting for a spike to happen. Then after that spike, right, your stop loss will be at above that spike, right? And then you actually wait for what? The green moving average to touch the 90 level or the 80 level, and it must cross below, right? It must cross below the red moving average. So once you have that, look at this is a perfect example here, right? Your stop loss will be above this swing high, right? Which is telling you this is what we have. Practically, this is what we have: higher, lower high, lower low, lower high, lower low, right? So your stop loss will be above this lower low, right? The pro tip I'm going to be giving is that whatever strategy you are using, you must be able to read market structure from it. Market structure is fundamental in this business. Once you are able to read market structure in the right perspective, obviously your trading profitability would increase drastically. It's going to increase rapidly. So this is another example here. You can see after this spike up, right, you can enter. So your stop loss will be above this spike, right, which is your lower high, right, which is your lower high, and your target was the lower low here, the previous low. You target this lower low, the previous lower low, as your take profit, right? So let me share the settings for you. So the first thing is that for those of you that are new, you click on this F here, right? So you click on this F here, you click on this F here. So the first indicator we're going to be using is our moving average. The period is 21, shift is 0, method is exponential, apply to what? Apply to close. So for the style, you can use any style of your choice. Alright, so once you are done, you click on what? You click on done. Right, so you have it like this. So the second indicator we're going to be using now you click on this F plus here. Right, so once you click on that, right, the next indicator is going to be our stochastic. So the K period is going to be 21. Now let me tell you one thing about this thing. One thing is that I will never give you an indicator that you don't understand the pros and cons of it. I've always told you whatever indicator you are using, make sure you understand the pros and cons of it. Now if you observe the K period, now the K period is 21 period, right? Period is 21. Now the first indicator we added was our moving average, which the period was 21. That means we'll actually integrate the moving average 21 in our stochastic oscillator to read the trend, right? To read the trend. So that is what we are using that for. Then the dip period is 9, the slow period is 9, price feed is going to be low, high, method is going to be simple. Now the difference there is that if you remember very well, on the moving average, at this method here now, right, on the moving average it's exponential, while on this stochastic oscillator now is simple. The reason being that 21 moving average was going to be 21 moving average, simple moving average will give you a lagging, is too fast. You understand? It's going to be too fast, so you tend to have a fade signal. It's going to give you a fake signal, right? But with the exponential, now exponential is a little bit slower, so it's going to filter the noise in this false signal is going to be giving. So that is what we actually do with this indicator. We integrate both the fast signal and the slow signal, then we'll filter it out with our D period. So that is the pros and cons of this strategy, right? That is the pros and cons of this strategy. So once you are done, then the level is, we have 4 levels: the 20 level, the 80 levels, the 10 level, and the 90 level. Now the 20 level and the 10 level is going to be for a buy on crash. Then the 80 and the 90 level is going to be for a sell on boom. So once you are done, you click on done, right? So after that, you add the last moving average, which is our alligator, right? For the alligator now, the jaw period is 9. Just follow the setting that we have here. Then the method is exponential, apply to median price, high and low, divided by 2. So once you are done, you click on done. So and then you have your chart like this, right? You have your chart like this. So guys, do well to backtest very well. If you actually enjoyed this video, please do well to click on that like button and subscribe if you are new to the channel, and if you are an old subscribers, do well to share with friends, let them also benefit from that. So whatever question, whatever comment that you have, you can actually drop it on the video. I will definitely respond. And if you actually need more info on personal mentorship, or you actually need an insight on signal, then you can actually DM me. You have my contact on the description of this video. And for those of you that are new, you can actually join my Telegram channel. You will actually have a daily, a constant update on the financial market. As we get the updates, we're definitely going to update you. So guys, see you well. Let's do it to keep making the reef. Let's do it to keep making the reef.